think.
I don't know if she started it or Cool Tiger did or Eye of the Tiger, but I know Cool Tiger was there from the very
I think
beginning.
she started the first one, and then Tiger made his own Discord after things were getting kind of funky in that one. And then when she left, we all kind of just migrated to. Well, we had Tigers, and we still had Gaxi Discord available, and then the Gaxi Discord got merged into the Tiger Discord, and that
Right.
became the Gaxi chat, and then from
Right.
there is where we're at now.
Yeah, you're absolutely correct. That's exactly how it went down. And then I remember people starting to talk about Priscilla being a pump and dumper, man. That lasted for like 2 years.
All right, there we go. CC made it in here, so that's good.
Yeah, sorry about that.
All right, Alan. Well, it's almost 4:50, so we should kick it off. I mean, there's no particular reason behind, doing this. I think this is great. A lot of us, we talk every day in the chat, just kind of getting to hear everyone's voice. I think this is a great thing, and we should do it more often. Just even just talk, bounce ideas off each other, right? And given, the recent market conditions, I think, it definitely helps, talking to other people about it and, getting some feedback. A lot of people are new, so, they may have a lot of questions. And a lot of times, it's much easier to, tell you over like a voice chat rather than type out a whole paragraph, right? CC, I'll let you kick it off.
Sure, no problem. This is great. I appreciate it. And it's been a great room. And Tiger deserves a tremendous amount of credit for putting together a very well-respected room, one where everybody respects one another and is open to ideas and any questions, whether somebody has $100 or $1 million, doesn't matter. I think that's great. And hope it continues. And we should probably keep to those rules, hopefully. I just wanted to say that as far as my experience goes, and most people know I was on Wall Street for a long time, 30 years or so in this business. I've never seen a market like this ever. This isn't normal. It's the best I've ever seen in the large cap space and now the micro cap space and the OTC and so on. But I always urge caution because I've seen what happens when things get really bad. Right now, there is no alternative with respect to investments. There's a lot of money coming in, stimulus checks and whatnot from the government. People are staying home now. I think a lot of people probably, rather than going to the casinos, are actually in the stock market these days. Also, but the OTC market, which a lot of us, have done quite well with lately, has been on fire. It's like I've never seen before. And I can tell you the main reason for that and the reason people are doing what they're doing is because there's a time where people who, all these companies are basically financed with convertible debt. No one can deposit that convertible debt right now, for the most part, especially for stocks that are under 1 cent. It's impossible to get that in anywhere. And that's why you're seeing such huge moves, stocks like Minerco, MINE, and others, because nobody could deposit any stock in there. And all the old stock that was in the system's been sold a long time ago. So that's why you're seeing, in my opinion, such big moves in these. But honestly, I don't think the valuations make any sense, but it doesn't mean it won't get richer. It could continue to go the way it is. But as other people see on here, I always kind of stress caution because you never know when something will all of a sudden change the dynamics of what we're in. And the big mistake that I think people tend to make is, and when something happens, like an earthquake in the market, they're like, well, just buy the dips on this and so on. And of course, when buying the dips don't work, all of a sudden you find you're in a really bad trade. That said, today was the first day I actually saw something in the OTC market that I think was a mini earthquake. For those who follow closely, COUV was halted for trading for the next 10 days by the SEC and FINRA for potentially misleading press releases. And we saw an immediate reaction in the OTC markets where a lot of stocks like Galaxy, for example, GXY, got hit really hard really quickly and started to come back. That's like an earthquake, and you can't not just think that that has any meaning. You saw during that move lower happen at any given time. If the SEC comes in and starts to do this, or FINRA to others, people might get a little bit more scared of buying these. So you just need to be aware of these things that are going on around you, so on, and make sure that the companies that here, most of these, have been dormant for years, a lot of them, so on, and now are coming back to life. You have to make sure that the releases they're putting out are real, management's real, and so on. I think it's extremely important because you find yourself in a bad trade really quickly. I'm sure the people who right now own COUV are not going to sleep well tonight, and I hope no one has that right now. I did it one time, sold it a long time ago. I thought I was brilliant at selling it at 44 cents. Obviously, I missed 50% more of the move higher, but we'll go broke taking a profit. So I'm older than most people that are in here, so I'm more with this, and I see the unbridled enthusiasm, which is great. I think is fine, but we all need to remember that there's risk of losing everything when you put money into these, and so on. I think that's general comments right now, Darsh, for that I'll make, and I'm sure you have some others as well. I'm happy to answer and discuss any topics. It doesn't matter if you think it's stupid. It's not. Anybody who's just starting out, to the most advanced, to individual stocks, to how on earth we managed to be able to find Alex's picks, who Alex is, all these kind of crazy things. If that's going to continue and all that, I'm happy to answer any of these things. Stay on as late as anybody would like. Last time we stayed on for a couple of hours. I'll end it there, I think. I caution everybody, because I know a lot of people are young again, and this isn't normal. This isn't the way the markets normally are. I mean, even I will admit that I wake up every morning really early because I can't wait for the trading, for the market to open up, because it's been so incredibly great since really Thanksgiving. This isn't the way it normally is, and there'll be a day where either it will normalize or it won't be as good, or it'll get really bad. So I'll just throw that caution out there. Darch, it's your call here.
Yeah, no, that's everything that you said. I think these are all really great points, and it's really funny because all of these things that you're saying, when I was at the firm, my boss would say a lot of these things, and at the time, I was obviously trading a book for a firm, and managing the risk. I would think in the back of my head, like, whatever, what does that guy know, right? But it's until you get kicked in the ass, basically, right? Then you realize, like, oh shit, maybe I should have listened to that guy, right? So it's just one of those things, right? A lot of people just don't have this experience, and it's very easy to tell yourself that yes, I'm being cautious and I'm ready, in case things were to turn. But when things really do turn, you're most likely not prepared, right? So it's just kind of coming to grips with reality, right?
And setting correct expectations.
Yeah, exactly. And what happened today, I think, is a great point. And one of the things, I mean, I keep on saying it, all the time, even in the chat. People should, right now, you got to play good defense. That's what's important right now. To manage your risk. I know a lot of people are up a lot of money, and it's nice to look at paper profits, but when things turn, those paper profits go down really quick. And a real prime example of that recently is GME. All of these kids were laughing, on Wall Street Bets, whatever, Twitter, all of those places, and that went to shit really quickly, right? So these things, when they do turn, fear is stronger than greed, so things will definitely go down much faster than when how they went up. So everyone needs to be on the lookout, and you just want to make sure that when things are moving, you do secure money, you're playing defense, so when something like that does happen, you don't get caught offside. You still want to be able to walk away with the profits, right? And a lot of people may not realize it, but all of these profits that you're making, it's really great, because it's going to allow you the opportunity to, spend that extra time in the markets. You don't have to force yourself to, let's say, make money every day, right? Especially if you're up big right now, you can take this time to learn, have the proper skills. Because like CC said, this is not a normal market. This is not how markets work. But, that's besides kind of the point. It is what it is in the moment. But once things do normalize, everything that people are doing right now is not going to work. Right now, I mean, every day when I look at my watch list, except today, obviously, everything is green. I could just close my eyes and pick a name and put a trade on, and it's a winner. It's as easy as that, and that's a big problem, right? So a lot of people, at the end of the day, right now, when they go home, they feel like a hero because whatever stock they bought is going up. And they think they know what they're doing, but that's not reality. It seems like reality right now, but once things do normalize, I think they're gonna have a big learning curve and shift when things finally go back to normal or worse than normal. So I mean, yeah. Besides that, if you guys have any questions, me and CT are more than definitely happy to answer those.
By the way, we're not trying to scare anybody. We're just trying to shed reality to the situation that's going on here. And look, number one, no one ever went broke taking a profit. If you miss, half the move like I did on COUV, I really don't care. I still made a ridiculous amount of money. I would also say this: you have to define the difference, and you've heard me talk about this, between an investment and a trade. I'm gonna ask a question and just answer it to yourself. How many of you really know? I know in Galaxy you know what they do, okay? But on many of these tickers that come up, how many of you actually know what the company really does? And if you don't, and you're holding it, then it's really just a trade, right? So you have to think about the difference between whether it's an investment or a trade. And if it's a trade, you don't fall in love with it. If it's a loser, you sell it. If you're happy with the gain you have, and it's a commodity like that basically has gone up in value, and you're out, you're out. That trade today that I brought back in on the DTII, honestly, I have no clue what they do. I don't. Me, I bought it. I had a good idea it was going to go higher. Tomorrow morning, I'm out. That's it. I have no idea what they do. I have to know the difference between what an investment is and what a trade is. To me, DTI, for example, is a trade. And on the OTC, I've made it pretty clear. There's a couple of tickers I put there that I think longer term have the potential to become huge winners. So there's a huge difference, and recognize where that is. And take the gains where you can. And if it's a loser, get out, because that loss can become huge very fast. And we saw that today. A lot of people who sold Galaxy at below 5 today. I'm sure they're not happy. So they made a mistake. Whatever. Any questions?
Yeah, I have a question for Common Sense. So earlier you alerted DTII. I think you alerted that under 6 cents, which is great. The only problem is last time Alex alerted DTII, it did get dumped the next morning. I am still holding. How do you think this time will be different?
So look, when it comes to him, I honestly don't know who he is. Just so you know, I have no clue. I do know somebody who knows him though. Which is sometimes where all of a sudden these picks come in a couple of minutes before they happen. I view that as no different than, honestly, what some of these other rooms do, where they kind of get together and they all move up a stock. So I actually don't have a problem with it. It's not like it's inside information that I know news is going to come out. For example, on Galaxy, I have no clue if and when news is coming out. No clue. Okay, just the chart told me, and the amount of volume coming into the stock told me. Question on DTI, I would say this. You're right. The last time the stock went down, market's different today than it was when the stock went down. Saw what happened at the close on that stock today. It closed strong. My guess is, and I don't know if I'll be right till tomorrow morning, that it gaps up again. On his picks for the majority that are at 345, if you hold them to the next morning, because he hypes them all night long, they normally gap back up. I'm a seller on the gap up. So you're right, though. The last time that happened, it didn't work out. This time it appears it will. So again, I view it as a trade, and I'm going to be, if I'm right more than 50% of the time, that's a good thing, right? And I'm really going off of the order flow that I'm seeing, and that's it. So it looks like it's going to be the right trade this time. I'm out at 9:30. I'll tell you right now.
Yeah, your past two
Question.
talks on CLIS and HDII were great.
Well, I mean, look, it's just I pass on what I find out, right? And it's making money for people. I mean, the damn stock at 5 cents is where I kind of told people around where it was. It was up 50%. That's crazy. But again, I have no idea what the company even does. Just know, you just know the guy is going to hype the company and so on. That's the difference, though, between a trade and an investment, right? So to me, whatever, I'm out. My profit loss tomorrow looks good because I'm out. That's it. Good question, though. Very good question.
So I have a question about the change in the market and the possible change in strategy. I've learned about risk management from Golden, and now seeing that there is this, maybe let's call it temporary gold rush, and this might be a chance for some of us to just get a little bit more than we would in a normal market so that we have more when the market resets. Where is that balance and where is that line in pushing your risk just a little bit more? Do you have any advice on that, either one of you?
I mean, I'll start with that, and I'm sure that Darsh will fill in. By the way, my name's Al. You can call me Alan. It's fine.
Thanks, Alan.
So first of all, everybody's risk tolerance is different. I'm my 50s, almost 60 already, and obviously my risk tolerance at this stage of my life is different than somebody who's 21. So the answer to the first part, there's multiple answers. That's kind of the micro issue of what you're asking. I think really what you're asking is the macro issue. Where are we kind of within because we are in a bubble in the OTC right now. We're at the beginning, we're in the middle, we're at the end. So, when I look at it from the macro point of view, and I'd like to hear Darsh's comments in this as well, one of my friends is making fun of me right now. I look at this, and there's more stimulus checks that are going to come from the U.S. government. Interest rates are at 1%. Sarge is making fun of me right now. That's all right. Anyway, and interest rates are, effectively zero. If you walk into a bank in a money market, you're going to get nothing. So the alternative is lower. The other thing is that when analysts, kind of look at stocks, and I'm not talking about the micro cap market, I'm talking about the stock market in general, S&P 500, the Dow, and so on, the NASDAQ. They use normally discounted cash flow analysis to do their calculations in terms of determining stock markets, 2 or 3 years out, which is really what they do. And one of the things that they use in that as a constant is implied interest rates. And right now, with the 10-year at around 1%, that's going to create a different price to earnings multiple in the market than when interest rates are 2, 3, 4, 5, 6%. For people like me who remember 10% interest rates, the price to earnings ratio of the markets is a lot lower because of that, because there is an alternative where you can go get some income. Right now, you really can't do that, or some return, I should say. So where do I think it is? I actually think with more money coming into the markets from stimulus, which I think a lot of people are going to put into the markets, this could get frothier. It could. It makes sense to me that it would. I would say, though, that after people do their taxes from last year, they might see that they owe a lot more money than they thought. I would imagine that this year, already in gains that people have taken, that they're looking at pretty massive tax bills for 2021. So in my view, I think that from a timing point of view, and this is just my perspective and it can change over time, around the time of April 15th, when taxes are due, I think you could start to see some money pull back, and I would be like 30 days ahead of that. If that makes sense. To me, it makes sense. I see money coming into the markets from the $1,400 checks that everybody's going to get soon, at least if you're in the United States. But then I kind of see that, I think people got surprised in their taxes this year when they see what their gains were last year, especially at the end of the year. And, they'll plan for that as they move along. So that's my view. I hope that answers your question. It's different for everybody.
Yes, thank you.
Welcome. You want to make any other comments on that?
Yeah, I mean, Kerry, the question that you have is a really good one. But the answer to that, like CC said, it's to get into the nitty gritty of all of that. It's a pretty complex topic, which, for most people to comprehend in here is going to be kind of out of the range. But to generalize this topic, what CC said is, basically on track with everything that's going on. And the main things, that you asked as far as kind of the strategy and, where are we and the risk management, and should you be more, risk seeking than risk averse, right? Right now, especially to kind of maximize, kind of what's going on. And my answer to that honestly is, in these environments, I'm actually more risk averse than risk seeking. Once things do normalize with, the strategy and everything that we discussed, I'll be more risk seeking just because things are more normalized. Because right now, one of the big questions is, when does it end, right? We can all kind of guesstimate when it's going to end, but, those are not concrete answers. It's not something that I can rely on. It could end tomorrow. It could go on for another year. No one knows, right? That's the real answer. So that's why, right now you don't want to be too much risk seeking, because when the tide does turn, if you're, seeking too much risk, you're going to end up with a lot more on your plate than you were looking for, sort of thing. So right now it's good, to just kind of keep your risk limits in line with your tolerance, because, like CC said, everyone has different tolerance for their risk, right? So as long as you're within your limits, I think that's kind of the safe place to be right now.
Thank you. That's interesting.
It's a great question.
Thank you.
Anybody else have any questions?
I have a question. So I kind of make sense of how like everything kind of just moved all at once. Like I still kind of don't get it. Like I understand that money's flowing in and people are starting to buy, but every chart that I see has looked very similar in terms of from last week to this week, starting from Monday when everything started blowing up, that everything kind of like left trips, even if it didn't make sense, and now it's kind of stabilizing in the dubs. And even so, it's like I kind of don't quite understand how exactly everything shifted all at once. Like I'm just trying to make sense of that. Like it's so weird to me. It's like I just some stuff that was complete crap, like companies, even CE Cup trips are moving, and maybe it's the volume, the people buying. I'm just trying to make sense of that.
That's a great question. And by the way, a good friend of mine has texted me something I just want to bring up here. A lot of people in here really are in here for the small cap plays or the micro cap plays that just run up real quickly. But if you notice, I posted always, but my large cap holdings are here that I have, and I really think it's important, that everybody has to think about their own portfolios, but diversification is super important. You really do need to have more than just these little micro caps, because it's just not the way the market kind of works. So I know that we specialize in that area and so on, but I just wanted to reiterate that we didn't talk about this yet, but Sarge brings up a great point here in that, diversification amongst the different classes of stocks, the Amazons of the world and Apples and so on, or just an ETF if you want to just buy I'm happy to give out quality ETFs that I think, everybody should have in their portfolios because they own really quality companies in there. to have that in there, and so on. I wanted to say that first. And you really have to think about that because it just, this part of it's the gambling side. That said, your question on how the trips move to the doubles and all that, I would say this, very similar to what you're seeing in what happened with GameStop, for example, where a group kind of moved the stock. It's no different than what's really going on here. I think a lot of these people have some inkling of things that are going to eventually come on these companies. Like HBRM was a good example. Obviously, someone, when the stock was no bid, 001 offer, had an idea or contacted the CEO and said, let's start doing the filings. He did that. Right? So on. But some people have, I don't think, really have any idea if they will or they won't. And you're right, it's probably the order flow they're following. And that can make you really uncomfortable. And I think that's really what you're getting at. I brought up at the beginning, the reason that these stocks can move so easily right now is there's nobody with debt that usually finances these companies any longer in the market that's sitting there and dumping stock day in and day out. Okay? You know, I except for, you know, there's a couple of them. HBRM is a good example because there were old debt holders that were in there that you can see converted in 2018 if you read the filings. And you're seeing that stock come out of the market right now. And that's why that stock isn't moving up right now. That's done. They'll probably move that stock back up again. Okay? But a lot of these that you're talking about, nobody's got stock in the system to sell. That's why they're moving back up. You know, Minerco, which I know in detail, mine, M-I-N-E, is a great example of that. It was zero bid a couple of months ago. Now it's, you know, it hit 2 cents today. That's crazy. Just also realize the percent gains in these stocks. Even Galaxy, which I'm a huge fan of, and I put charts up today. And I really do think, you know, I've talked to some very experienced traders and investors here. You know, when I look at that chart, I see, you know, mid-20s to 40 cents a share coming. That's what the chart suggests to me. But the gain since the last 4 weeks has been 400%. So if somebody comes in and sells, it's not a little bit of a surprise, right? You got to realize where we've come from. And that might, I hope, answers your question a little bit. Why we constantly say, take some off the table, minimize your risk. You know, there will be a pullback at a certain time. Look at the charts. And if you don't know how to read a chart, I'm happy to, and other people are happy to look at anything you have at any time. Now, really, the goal of this whole room is for everybody to make money.
No,
And,
I really appreciate that.
No problem. I mean, it really is, and you know, it's you know, and I'm getting text from one of my good friends here, and he's absolutely right about this. But companies like Alpine, you see Alps on the offer sometimes if you follow Level 2, Vision, Wilson Davis, and so on. Those are the only firms that are still accepting to some degree these certificates, but they're cutting back tremendously on what they're willing to accept because the net capital requirements for stocks that trade under 1 cent are tremendous. That's why you're seeing big runs again in these stocks. Even the bigger institutions and guys who used to be able to get in, they can't do it any longer. It's not happening. And I thought actually this would start 3 years ago when firms like Alpine stopped accepting these certificates, but it didn't. But obviously that's now been figured out and groups are getting together and moving these stocks. I think what you have to do, and what we hope to do in this room, is to discern the companies that really have something moving forward and the ones that really don't, right? And that's what you're asking. So I'm happy to always look at the filings. And if you notice, I'll always go back to the filings and look at them. And it's really hard if there's no filings on something. Somebody says, what do you think of this? It's really hard to tell. So unless you have some kind of inside information, you know, that something's going on, that there's going to be filings, it's really difficult to tell. I hope that answers your question.
No, it really does. I did feel unsettled a little bit, like how everything moved. Like I understand there's a lot of people getting into these stocks and stuff like that, and I understand like the reality is that the lifestyle has changed ever since COVID. So people are looking into these markets to make money, and that's understandable. But for me, you know, I take what you guys say to the heart, and especially when you've been warning us, like, be cautious, and then seeing like everything just move out of nowhere, and especially like Zalmi's room, where he called out all these crazy trips and everything like that. Literally every single trip that he's called is now almost running to a set. And it's just, I mean, I get it, but it didn't make any sense. And
well, it actually doesn't make any sense, just so you know. I mean, that's not normal. What's going on now is not normal. So this is why, I mean, for me, if you literally, have a big gain and you sold and you said, I'm comfortable, I have cash in my account, and I'm going to do it again tomorrow, there's nothing wrong with that strategy. Not in this market, because it could end tomorrow. We don't know. Right now, all these trips are moving like this. That's why I said, like on that other trade that I said that other people participated in. I'm out at 9:31 tomorrow. I have no clue what the company does. I don't know. And if I don't know what they do, there's a couple that I put in there. KULR is a great example. There's a company with an extremely bright future. That's an investment. It's not a trade. Yeah, sometimes you can make a trade because the stock goes up. Those know that MOGO has been a phenomenal investment since $1 and something.
Amazing, by the way.
I mean, but here's the thing, right? It caught a Bitcoin rage, right? You can trade around that if you hold a core position. Same thing with KULR. Same thing with AFFU. There are others. GCAM, the one that Goldman found. I think these are things you find. We found what was it? CLIS, Clickstream, when it was in the 01s. And you look at the intrinsic values of these things. There's a difference between that and these trip plays. Honestly, some of these trip plays, you have big gains in them. If you literally took all the gains and you said, I'm going to do it again tomorrow, and I'm going to close out the gains, I actually wouldn't have a problem with that, because who knows when it's going to end. You watch HBRM, for example, go from 007 to 002 in one day. I don't know how many of you got caught in that trade or not, but there you go. How'd you feel when that happened?
My damn heart broke.
Right. So this is why guys like us constantly say, take profits on the way up. But at the same time, if you're confident, it's like I pounded the table, and I normally wouldn't do this on a trip stock on ICBU. I am very confident that's going to follow the same exact pattern that the other ones did. Why? Because you look at the CEOs and the companies, you can match it up. You could kind of figure it out, right? And so on. But if the stock starts to march up, you've got to take some off the table as it's going up. It's okay to do that. Then you don't feel so bad the day it falls from 007 to 002, and you're like, oh my God, where's all my profit?
Yeah, that was a bad hit. I took a 40K hit.
But you're never going to hit the top, and you're never going to buy at the bottom. And if you do, it's purely luck. It's just the way it is. Right. So, and don't be upset if the stock continues to go up. You made money. It's okay. There's other plays in the market. There's other investment. There's other trades. Every day there's been a great trade, right? So if you make a trade and the stock continues to go up, so be it.
Awesome. Thank you very much.
CC, so one of the questions that was posted in the chat here is, there's somebody interested, Drum, what I see, yeah, interested in finding out ETFs that you'd like in the tech space. And I'll just kind of answer this on my end quickly, which is, I don't really follow long ETFs. I know Alan is, into those. So he's going to be the better person that can actually answer, because I personally do not follow that space whatsoever.
Okay. So, I mean, in the tech space, normally a lot of, first of all, Vanguard has the cheapest ETFs. So I would suggest if you go to their website and look at all of the ETFs that they offer, you probably could find a high quality technology ETF through them. But a lot of them are specialized now, I noticed. So you can be in different sectors of the market. I tend to be on the ETF side. I think the biotech index right now, given all the stuff that's going on with COVID, and now there's, and it's not so much that COVID is happening as there's attention on the fact that in reality, when you take a step back and think about the fact that, the world came up with a vaccine in 6 to 7 months. That's incredibly awesome news, right, in the biotech space in terms of what they actually accomplished. When I viewed that, I thought to myself, you know what? A lot of money is going to flow into these biotechs, because if you really think about the advancements that are being made there versus, let's say, what happened with AIDS, for example, where it took years and years and years to come up with, a solution to that problem. It's truly amazing what's gone on. So, I bought the biotech index. IBB is the ticker. You buy the IBB. You can buy the technology. You can buy the NASDAQ, QQQ, if you want to do that. I think it's a great strategy to use. The Vanguards that I like are, I'll tell you what they are. The value one is VYM, is the ticker. It pays a pretty good dividend. It's a value ETF. I think the value part of the market is undervalued right now versus the growth part. VYMI is the international ETF that's similar to VYM. That pays a very good dividend. It has like a PE multiple like 12 or 13 of the stocks that it owns. I think that's good. And VIG is the other one. That's the growth part. It's the Vanguard Growth Index. And I think those are 3 quality index funds. But you can go to QQQ. You could buy the Russell 2000. There's all those things. But go to the Vanguard website. Look up their ETFs. I think you'll find plenty to choose from on there, and the ones that suit your need. They're the cheapest in the market. They're under 10 basis points cost base wise, and Vanguard is just a tremendously run, in my opinion, fun company. Hope that helps.
Yeah, no, that's great. And kind of going from that, the next question that was.
Well, before you do that, I want to make one other comment. Jim Cramer, who actually 20 years ago I wasn't a fan of, but I am now. I actually think the guy's kind of funny. He's really pretty smart, and I am part of the Action Alerts Club there because I love to follow what he's doing. But he makes a really good point. The first $10,000 you have should be put into an index fund. And I kind of agree with that. So I really do think everybody needs to have some kind of ETF, whether it's an index fund or a value fund or something like that. It's out at the first $10,000, but that's up to everybody because I know a lot of people in here probably don't have even $10,000. Maybe it's $1,000, maybe it's $100. For my own kids, that's what I did. And then you can work off of that. I just wanted to point that out, that even somebody like him, who's a Goldman Sachs guy who owned his own hedge fund, who owned his own and so on, recommends that. I think it's a smart thing to do. So I'll say that. What was the other question, Josh?
Yeah, so the other thing, someone pointed out is, these are all good questions, is, someone that's new to the OTC space, can you talk a little bit more as to what a normal market looks like? And,
Not this.
Yeah. The only thing I'll really say is, a normal market right now, there's so many opportunities, okay? In a normal market, it's not going to be like this. If you have a watch list, it could be XYZ stocks, whatever stocks from the OTC space you could have on your watch list. You're not going to see everything that's green. Everything you touch just turns into gold. That's not a normal market. In a normal market, you're going to find you really have to work and be patient to find, those opportunities, because a lot of the times, like Alan said, is most of these are just dilution machines. Like most of these companies are either nothing, or even if they're something, they're here for a reason. And they don't have the money to operate. Like if you go and look at a lot of these filings, most of these companies don't have cash. They have nothing, right? So the only way to keep this going is by diluting. That's the only way. So under a normal market, you kind of see a lot of stocks that just are kind of slowly bleeding basically every day. There's still opportunities, but it's not going to be like this right now. Like I said, you could pick any ticker, probably goes up 50% tomorrow, right? So that's kind of the big difference. There's many other little nitty gritty differences, but I think those doesn't really.
I would point out actually that there's one thing that really needs to be stated here, and there's a very large difference between the OTC market, NASDAQ, okay, and the New York Stock Exchange. OTC market are considered not unlisted securities. So they don't have to abide necessarily by putting out 10Qs and 10Ks and all those filings. They also don't have market makers who make really, who kind of make markets and can also trade for themselves and their firms. Really all they're doing is reflecting buyers and sellers that are out there right now. And because of that, and because the inherent differences between the OTC market and the NASDAQ, for example, can have tremendous, huge dislocations market in the OTC where stocks can trade to incredibly high valuations, and that's what we're seeing right now. Versus if they were in the Nasdaq, some of these companies, would never trade to 100, 200, 300, 400 or $1 billion market valuations if they were in the Nasdaq. Market makers would short against the positions they're seeing coming in. You can't do that in the OTC. There's a big difference in there. So there's fundamental differences in the way, for example, an MOGO, which is a NASDAQ stock, MOGO trades, versus, something like, stocks that, or even like the one that you like, the GCAN. It trades completely differently. And I hope people understand that there's a huge difference in the way the mechanics work. That's why the OTC stocks can trade to such, it can move so quickly and so fast. There really is nothing out there that's kind of regulating that movement, whereas on the Nasdaq there is. Do you understand that? I mean, if there's questions on that, I think that's really important to understand. No questions?
Yeah, exactly. No, I think that's a great point that you bring up because there's a lot of misconceptions about market makers in the OTC space, and that they're
Yeah, you know what? I want to make one more thing. I want to make a statement, and I hope you guys take this as gospel. No one is shorting a stock under a penny. Anybody who says that to you either is lying or doesn't know what they're talking about. Okay, really clear. In fact, no one is shorting any stock on the OTC. It just literally can't be done. So if somebody's telling you that, it's probably a reason not to be in the stock. I can't tell you how many times I've heard, oh, they're shorting the stock. Does anybody have any idea what it would take to short a sub-penny stock or an OTC stock? The kind of net capital requirement that you'd actually need in an account to do it. It's tremendous money. You wouldn't be able to borrow the stock, and no firm would take the risk to do it. So I really want to dispel that myth. It's out there, and if anybody's shaking their head and disagreeing with me, I'm sorry, but it's not even an opinion. It's literally a fact. I mean, if it's out there, no one is shorting it. No one. They may be able to sell against the position that they have, but no one is shorting it. I want to be clear on that. And on that topic, if anybody's got questions, I'm really happy to answer that. Can't tell you how many times I've had to go over that.
Yeah, exactly. No, I think both of us have said this many times, but people always just keep on repeating. There's shorts. Let's get the shorts, but there's no shorts.
No shorts.
There's no to
Sellers.
get.
Can you explain to me why there's a short report and there's percentages? Is that made up, or is that when you're saying?
Oh, no. So let me tell you what that is. First of all, when you hear people quote, shorting the stock, really what they're saying is there's somebody who's got dilutive debt that's selling into the market. That's really what they're saying. Okay. What you're seeing is the daily short report is nothing more than unmatched trades, but they all get matched up. So if there's, let's say, a difference in the unmatched trade between a buy and a sell, which is really hard to do, they'll consider those shares that are, quote, short. They're really not short. They're just unmatched. Real only short position you can ever see. It's reported once a month. Go to NASDAQ.com, look it up. Up the symbol, you'll find it. It's listed there. You'll be able to see it for New York Stock Exchange listed stocks also. You can pull that up also. It's on NASDAQ.com. So to be clear, when people are putting up the daily short reports and the SHO list and all that, it's nonsense. It's just unmatched trades. That's all it is. And that again is a fact.
What's an unmatched trade? I guess I need further clarification so I can.
Well, theoretically, for every buyer, there should be a seller, right? You've seen sometimes where, for example, we call it an iceberg or a brick might sit at a certain price and hundreds of thousands of shares. We're seeing it right now, for example. Somebody might mute themselves there. Yeah, we're seeing it right now on On HPRM, we're seeing it right now, where Alpine is sitting at the offer and they're taking in millions of shares. Those are going to be considered unmatched trades because all they're seeing is 10,000 shares on the offer and millions of shares going off. So they consider those shares that are shorted. They're not.
Oh, okay. Thank you.
Welcome. You got it? Right? And I understand
Way
that.
better.
That is something that's like all over the message boards and all over the stuff. It's just not true. That's why you're seeing that. And I would tell you if it's an opinion versus a fact. That's not my opinion. It's a fact. Only place to see shorts, real shorts, is pull up NASDAQ.com. You can do it right now. I don't think they'll report it for OTC stocks, so pull it up. You'll find it on every company in the New York Stock Exchange and the NASDAQ. They're all listed.
Yeah, exactly. No, I think this is great that this point was brought up, because hopefully, it clears up a lot of doubts and anything that people believe is otherwise. And I mean, it's your opinion at the end of the day. You believe whatever you want to believe, but like Alan said, these are not opinions. This is how things are. It's not him or anybody making it up. This is the way things are, right? So there's
And please, everybody, ask questions. That's what we're here for. Everybody making money makes everybody happy. It's a good thing.
So here, Alan, there's one posted in the chat. I'm just reading off some of the ones that were posted in the chat. So someone's got a question for you, which says, how do you know when to take the gains versus when to keep waiting/holding?
It's a great question. I mean, if there was a magic rule for that, we'd all have our own island. Question. And a lot of it, and I'm sure you do it as well, is done by feel, and also risk tolerance. But I use charts sometimes. Galaxy is a great example of that. I would tell you that in a normal market, and I take trading positions. I have a trading position in Galaxy, right? In normal market conditions, on the gap ups that we've been seeing in the morning, I would absolutely have been a seller. Okay. Given the market, given the gaps up that we're seeing, I mean the markets that we're seeing in the OTC right now, I'm looking at the charts. So it kind of depends upon how much you know about the company, how comfortable you are with it. And I'm watching a stock like Galaxy move right now like this. There's been no news. We don't know what's coming, but certainly the stock is suggesting there's big things coming. Let's hope that's the case. And when I look at the chart and I see a breakout above 6.25, 6.5 that we saw on huge volume, and I see where the gap were, that's why I put that down there. So I look at it differently. That may change if the market conditions change tomorrow, but that's what I see today. Whereas the DTII, I know nothing about the company, and because of it, the stock could go up and do a double tomorrow. I don't care. I'm out at the open. I made money. I'm out. So that's kind of the way I view it. Does that help you at all?
Yeah, and to kind of add on that, I think the more you're involved in the markets, the more you have a feel for it. Unfortunately, as much as people probably want to hear the exact science behind how to do this, there isn't one. And that's why every time we stress, if you're up 100, 200%, whatever that percentage may be, but if you're up big in general, you reduce your risk, right? That's kind of how you go. And then as things chug along, the higher it goes, you take some more off and you keep on doing it, right? I mean, you're not going to find the top or the bottom, like Alan said, but that's not the idea, right? It's the idea is not to buy at the low take and sell at the high take, right? It's just the opportunity is there, and if you're able to get a piece of that that move that's happening, you did a great job. There's I never look back once you get out of a stock. There's no point, right? I made my money, I move on, that's it. The opportunity's gone. If it sets up again, then great, I trade it again. I don't look at it as the last time that, oh well, I missed out last time on a 200% move, so let me go and try to make it up this time. Everything is individual, right? You can't really force anything. So the safest bet for anyone that is in this and that's very new is that take some off the table. And what that's going to do for you is you're going to have a clear head. You're going to be able to think more clearly. if you have a full position on, if it's going in your favor, your thinking is probably clouded. You're going to make all kinds of decisions that you probably shouldn't have made. So, you know, taking some off the table, you secure some money, and then you keep things going, right? So that would be
Couldn't
my
agree
kind of
more.
2 cents about that. There's another question here that says, Alan, what are your thoughts on crypto?
Oh God. Well, you know what? Look, I'm going to defer to experts on that. So when I see Elon Musk and Chamath Palihapitiya saying that crypto is the wave of the future, I'm going to say they're probably right because these guys are pretty smart guys. Honestly, I know nothing about cryptocurrency. You know, I don't even really understand it. Quite honestly, I'm sure that people on this call know it a lot better than I do. So I'm smart enough and experienced enough to understand and know that when I don't understand something, I'm going to defer to some experts on it. And, you know, people are telling me it's kind of the currency of the future and that it's a performing currency versus cash, which is basically yielding zero now. Of course, there's risk in it and so on. So I would say that, you know, follow guys like Mark Cuban and Chamath Palihapitiya and Elon Musk and other people who understand you know this in a better way and a more detailed way. Look, if Tesla went out and bought $1.5 billion of Bitcoin, I would say that he's pretty convinced that there's good things coming in the future for it. I'll leave it at that. You know, that's it. I think Musk is a pretty smart guy. Yeah, I live in Austin, and so does he. So I'm not just picking up another Austin guy. Just kidding. Because obviously he lives in a much bigger house than I do. But you know, just defer to the experts. I know nothing about crypto, quite honestly. But I do. I was smart enough to be introduced by my very good friend who's been asking some questions to me via text to MOGO. He's the one who introduced me to it. I was smart enough to know that, you know what, I don't know what cryptocurrency might do in the future, but I know people are going to want to invest in it. So why don't I find a platform that I can invest in? So whether people are buying or selling it, that platform is still going to make money. Hence the MOGO investment, if that makes sense to anybody. Or Square, SQ, right? I mean, Square provides a similar platform. You have their Cash App. You could buy and sell Bitcoin on it right there. So to me, you know, I know nothing about it, but I'm smart enough to know that it's here. It's going to stay. It's going to get bigger. So I'd rather be in a platform that is going to benefit from it. I hope that makes sense to people. You know,
Right.
shrugging my
Yeah, no, I
shoulders
think
here.
that's a great point. You know, for anyone that doesn't know much about crypto, you know, getting like Mogo is a prime example. You know, essentially, it's a very complex way to express your ideas. You know, if you're bullish on crypto, let's say, you know, you're expressing it through a company, right? Like that's your vehicle that you're doing it through. So it's, you know,
Correct.
it's one and the same thing. It's just the way you express your ideas, and really, you know, trading at the end of the day is all about, you know, expressing ideas and capitalize on the opportunities, right? There's a million and one ways
I
to
mean,
do
to
that.
me, I looked at. I didn't want to be subject to the ups and downs of a crazy market. This thing goes up and down % on certain days, right? I'd rather be subject to the fact that there's a company that's going to make money, whether it's going up or down.
Yeah,
That's
exactly.
my view on it. Okay.
Yeah, no, it makes a lot of sense. And I know one of the other topics that came up during normal trading hours today was regarding PTTN. I forget the
So on PTTN, you know, it's kind of one that you caught both of our eyes today. We
yeah,
talked
pattern
about it
matching.
offline. And it was funny because you know, first of all, the inflow of money looked really good on it. And then I looked at the filings. I saw there was a little bit of debt in there and so on. And you could see there was a debt seller in there. OTCX, when they show up at the offer, if you have level 2, normally represents a seller in size of and normally it's of you know, a liquidation. Normally is in the form of debt to equity conversions. I could see it, and I was kind of just waiting for them to finish their selling. Then, you know, enter the stock. I know that Darsh and I were talking about it as the day was going along. He was putting up big bids and so on down at lower prices, and we got filled. That looks interesting to me right now, and it looks like it has the ability, when you look at the charts and you look at the inflow, and now that a lot of that debt's gone, to move up significantly. Honestly, I haven't done an analysis to think about how high it could potentially move. I really have to look at a chart. As many of you know, I really don't like to make price target suggestions because market knows. And by the way, there is no magic price target. It's not like all of a sudden it gets to a certain price target. Everybody says, all right, I'm out now. And there's buyers at that level. That's why we say sell on the way up. That's what we saw today on that stock. And it wouldn't surprise me if that gaps up tomorrow. And I wouldn't chase it if it does. Wait for it to pull in.
Right. Yeah, I mean, the kind of the areas to watch in that is, this morning it opened around 1.5 cents. Recently, it put in like a high at 2 cents, somewhere around there, I believe. So that's kind of the area to watch, kind of what we do there. And whoever was selling today, they got a lot done because I don't know about you, Alan, but a lot of my bids got hot,
I got hit all over the place. Every bid I put up was getting hit. Then he finally left. No, I know. I'm actually going to see if there was a T trade there right now. I can check that. So, but by the way, does everybody know what a T trade is?
Can you please explain, please? Because I've been trying to figure that.
So, all right, good. Yeah. So a T trade is a trade that is done. I call it compilation trade. So if there's a seller in the stock like there was on PT10 today, that seller gave the order to a broker, who gave the order to a trader, a market maker, with a limit, a bottom limit to sell the stock. In this case, he might have given an order for, let's say, I don't know, 50 million shares with a limit of 0.009 to sell the stock. And what he does is he gives discretion to the trader during the day to sell the stock as it's moving along. At the end of the day, or at certain different times of the day, and you saw it on a couple of stocks today. HBRM was one that I said, you see the trader mark out those trades to the seller's brokerage firm. Okay. And that's what I call a compilation trade. It's the average that the guy sold at during the day. And what you see is that block simply going over into that account, into the brokerage account, which is then marked out to the trader, to the seller. Does that make sense?
Kind of, sort of.
Well, tell me where it doesn't, because I want to make sure it does for you. Tell me where you have a problem with it. I'll try to explain it better.
So when you mean that the sale is being sent into the broker to the seller, what exactly does that mean? Is it like that amount of shares that they have in their possession, they are trying to just pretty much get rid of it, or that's the only thing I'm kind of confused on.
Okay, so that's a that's a good question. So let's say that I have that I converted in that company today at half a penny. Okay. Well, when the stock was 1.5, I have a triple on the stock, right? Understand that most of these debt sellers are what we call tactical. They're not strategic in that they really don't care about the company. They care about their own profit and loss statement. Their agenda is to sell stock as fast as they can, to take that cash, another deal where they can get a stock at half the price again and do it again. Okay? So what will happen is, is that the seller will call the broker and they'll say, okay, I'd like permission. And then the broker will grant permission. These days, you actually have to ask permission to sell X amount. Let's say it's 50 million shares of stock. And the broker will say, okay, what's your limit that I can sell down to? Okay. We'll give that limit price. In other words, what's the lowest I can sell the stock to? Let's say that limit today was 1 cent. So the broker then gives the order to the trader. The trader you see represented by one of the market makers. That was OTCX today on the offer there. Okay. He kept on showing 200,000 shares at a time. And kept on showing, showing it, and so on. And what will happen is at the end of the day, the trader will report back to the broker, I sold X amount of shares, here's the average price. So, and it's a blend. Think of it as a blend of all the prices that he sold at during the day. Take the average of that blend, and that's the T trade you see at the end of the day. Does that help you?
Yeah, that actually make complete sense. Like I get it.
Okay,
now.
good. And then the seller, obviously that stock's gone. He's got cash in his account. Okay? That's how it works. And that's why you see it at different prices that don't make sense to you necessarily. I'm actually going to look up right now as we're talking to see on the stock that we were talking about today if there was a T trade after the market closed. There were
wasn't.
3 on HBRM today, and that's because there was different sellers. There's more than one seller when you see that. Okay, that's what's going on there.
PTTN, there wasn't a T trade. So if
Was there one during the day?
There wasn't.
Okay, so they probably, I mean, there clearly was a debt seller there. We saw that today. So there's other ways for them to take that into account. We saw that when Galaxy had some traders in it. Galaxy, where we didn't see T trades every day, yet we knew that there was a seller in the stock, right? Now they're not there anymore, which is great. So it's possible that you get them sometimes on some stocks and sometimes you don't. In fact, on HBRM, I will point out today we saw T trades. Other days we don't. I don't know why that is, by the way. They used to always report T trades. Now sometimes they're not doing it.
Right. Yeah, no, it
My
just
friend
really
who-
depends. Most of them do report it, but sometimes there is the odds where you don't see them report it. And a lot of times, it actually what happens is if you're not watching time and sales during the day, they actually slip it in chunks during the day too. Sometimes.
Right. That's happening too. That's a good point. That's a
So
good point.
that's what happens. And one of the other questions was when all this pops, I know it will tomorrow or next month. Will there still be trades to be made in the OTC that can be profitable? Well, I mean, yes, there's going to be opportunities, just not as many as we're seeing right now. There's still going to be trades, but to really dumb it down for you, if there's, let's say, 50 opportunities, if the whole year stays like this or more, I'm just random numbers. When things do normalize, that number is going to go down to 5 good opportunities, let's say, right? So there still will be opportunity. You just need to, do your due diligence. You need to look into things. You need to know, what you're getting involved in. Make sure, and then you kind of make your move, right? So to say, you're not going to have a lot of trades like you may find right now that pretty much everything is moving. So you can hop on, ride the little wave, and hop off sort of thing for a quick trade. Those probably will not be there or not as many of them anyways. And the ones that are there, you have to be really careful just because the wave could die off at any moment and get caught. That's why personally, I mean, I do have trades, but I don't trade like intraday. I don't trade for 5 minutes or an hour. Even if I have a trade, it's at least a day. Just to kind of avoid getting in that situation.
I would also point out that the OTC stocks that do not have the convertible debt in it, are probably the ones that we'll look at after this market stops, being crazy, and so on. When I look at, for example, CLIS as an example, or AFFU as an example, they don't have convertible debt in it. But to me, I look at that as an OTC investment versus a trade. Obviously, if one of them goes up, like CLIS went this year from 1.5, and one day it traded close to 10. I peeled some back and I bought some when it went down again. It makes sense to trade around the core position. But there's an example of trades that will work out for you in the future. And we'll have to do more due diligence when that happens. Right now, you can throw a dart and anything's working. And that's why we have these rooms. And people are running things off of some of the more experienced people and what we're talking about. And by the way, I'm learning things also, right? I appreciate everybody's comments, but at the same time, I'm learning just like everybody else is every day from other people and from my own mistakes. So there is no perfect way to do this, and we all learn as we move along, even those that have tremendous amount of experience in this. So there will be other trades. There are always trades. It's just going to become fewer and fewer because right now this is insane.
Yeah, exactly.
Does that help?
Yeah, no, that's perfect. And there is a question that was for me. Do you have any go-to podcast you listen to regularly? Recently, I haven't been listening to it much. I mean, the one that I used to listen to was Tim Ferriss. That's the only one that I can really think of the top of my head. That sometimes, he has a lot of guest speakers that have a lot of really good content. So that's the only one I can say. And then, Alan, in a little bit, I do have to jump off. So I did post in the chat here that, unfortunately, the amount of questions that are coming in, I won't be able to get to all of them. And, I'm sure we'll do a lot more of these. But one of the things that was a common theme in a lot of these questions apparently that came up was, people wanted to know Gaxi analysis, and, I wanted to share a few words on that.
Yeah, sure. It's a great question. It's what brought us all together, and I want to again, thank Cool Tiger. I actually don't even know his name, for putting together a great room, and also all the people who have helped. My good friend in Houston who does the due diligence rooms, does a fabulous job. Works her ass off all the time in a real job. Has children and a family. Finds the time to put together all the stuff that she does. The people who tweet and try to be as helpful as possible. All that, it's very much appreciated. And I want to thank everybody for their contributions. They're helping with the trading or the due diligence or whatever the case may be. Everybody plays an important role. So I want to throw that out first to thank everybody for that. I think it's great, and it's very much appreciated. And I hope this continues. Galaxy is an interesting situation. I mentioned a couple of days ago, I view this now as a company that's moving from what I call the startup phase to an emerging growth company. Clearly, revenues have increased. Clearly, they're redoing their balance sheet. It's obvious the company wants to eventually move to a better exchange. And you can sense, because of the order flow that's coming in here, there's a lot of interest because the dollar value that's being traded in the stock is significantly higher now. So, when things like this happen, and we don't really see fundamentals yet because we haven't seen the latest earnings report. We know some contracts that have been announced. I'm sure there'll be others. We have to wait and see what those are and other things that management's been working on. As that comes out, stocks, a famous line that I like to say, stocks don't lie, people do. And right now the stock is telling me that things must be really good, because I looked at that chart and I posted it several times today. And I had to actually go to the weekly, not the daily chart, because once the stock broke over the 6 to 6.5 range, 6.25, I looked at that, and even the fact that there's no dilution right now that we have, and I think they've done a great job in doing that. I can only look at the charts because I don't really have the fundamental tools yet. Like, we'll see when the next earnings report comes out or the news comes out to be able to kind of do a fundamental analysis. The only thing left to me really is looking at what the charts are doing, what the stock's telling us. And I did that analysis earlier. And right now, I think in a normal market, or in a market that isn't as great as this one, maybe on some of these big gaps, people would sell if they're traders. I see the charts suggest to me the stock can move back and fill that gap. And it's clear. Take a look at what I had put there, and I'll put it again later tonight there. Again, there's a big gap between 6.5, which was the top we reached, I think in August, and the next gap higher, which is, it's like 40 something cents. I don't know if the stock will make it there, but it is there. Now, that said, we have to look then, as the stock is moving higher, at let's say 25 cents, for example, what's the market valuation at that point? And then say, okay, does it make sense given the fundamentals that we'll have at that point, and looking at sales and the growth and all that kind of stuff, does it make sense to have a valuation of where it is? And right now, I have nothing to rely on but the charts and the order flow that I'm seeing. I hope that helps. Fundamentally, we haven't seen a report in like 3 months. I would say that seeing Megan and other people buy stock in the open market was a really big tell. I think if we all went back and said we should have bought when they did, it probably was a great move. And management, a lot of times when they're buying stock in the market, in the open market, it's a pretty big suggestion that they think the market is, their stock is undervaluing the price. So that's what I would say. Likewise, if you saw sellers, like GameStop is a good example, when the stock was obviously at extremely high valuations in the last couple of weeks, insiders were dumping the stock like crazy. Obviously, that was a pretty telling sign. So that's all I have to work with right now. There isn't anything fundamental right now other than what we all know to suggest anything different. I just believe in the stock, right? Because I think the stock is telling us right now we're going a lot higher. It's not like it's been one day, irrational day of just this huge move up. We're seeing $1, $2, $3 million volume days, day after day after day. That's telling us something, in my opinion. Help?
Yeah, exactly. No, I think this is a really great point. And I mean, that's all there is to it at this point till we see the report, and then we'll have further information, right? And this is with any trade, I mean, that's the thing with trading. You're never going to have full information. As things kind of unfold, you're going to get more and more information to adjust and make your decisions, right? And that's just the beauty of it. So, I mean, at this point, all we have is, kind of the charts and, the level twos and kind of what's been going on, right? So,
and we'll see what happens. I mean, I think that's the best way. I always post what I'm doing. I have no problem with full clarity. That's why I always say I'm selling. It's fine. I don't care if people don't like that. I am. If they are in the stock and I'm selling, it's nothing personal. It just I've taken a gain, and that's just my view on it. It doesn't mean I don't think it'll go higher. It just I think there's maybe better opportunities elsewhere. Right now, again, like I said, on Galaxy, under normal circumstances, with that gap up this morning, I normally would have been a seller. Those who know me well, that I talk to day in and day out, I was on the phone screaming this morning, I have no interest in selling any stock. So that's where I stand. That's my opinion. That's how I view what I see in the market and on the charts and the fundamentals. That's what I see. Take it for what it's worth.
I have a question.
With other opinions. That's why there were sellers also, okay?
perfect.
Do you want me to continue? Do you want me to continue to have people ask questions if you need to go?
Yeah, no, that's fine. I can still stay on here for a few more minutes.
Just
before I
just a quick
take
question.
off.
So when it comes to buying stock, how much research would you say you have to do? For example, when getting to the stock market, learning about the stock market, buying the stock market. So from the five things that I'm understanding is that the first thing to do is before you even buy a stock is you got to look up the graphs of the stock. In other words, the performance of the company over the course of time. That'll be action number one, right? Now, number two, what I understand is looking up the current news about the ticker or the company before even buying, because you want to do the research on the graphs, to see how it behaved, and then what's going on in the current mainstream media with it. And three is to do more research to see how many gains, how many losses it had, and then just consult and obviously take a calculated risk being the final step. Is that something that kind of jives in how you should approach any stock?
So are you referring to like big board stocks like NASDAQ and New York Stock Exchange, or are you referring to OTC stocks?
Just in general, because I'm still learning a lot of this. It's very, very fascinating for me. So I'm a new investor.
There's obviously a wealth of information on stock companies like Apple Computer and Microsoft and so on. Yeah. Versus something like Galaxy. Right? There's obviously a big difference in there. Obviously, on the big boards, when I look at the large cap stocks that I own, I think that obviously undervalued. I look at the valuations and things of that nature, but I'll defer to analysts and other things that I see. But I'll also, for the large cap stocks, I think charts work really well. I think I could pull it up and see if a stock is really overheated, and whether I should kind of wait for a pullback, or whether it's kind of not. And I like stocks charts that hold to the 50-day moving average, 200-day moving average. And we can go through a whole technical analysis thing one night, okay? I think you're really referring to the OTC stocks. And I just wanted to tell you the first thing that I do on any OTC ticker, and Darsh and I, we've had this the conversation a lot. I go right to the filings. I go right to the filing. The first thing I look for is to see if there's debt, there's convertible debt.
Okay.
If there is, I want to know how much convertible debt I'm up against, or if I want to even be involved in it, or if there's
How would
filings in the
you-
first place.
How
Right.
would you, sorry, how would you go do about that? How, is there a way to?
Right. So here's what I'm going to suggest. I think that for those interested in how we kind of look at the due diligence of this stuff, that's a whole other course that literally we could do for 14 weeks like a college.
Mhm.
But we should probably take that up another time, because that seriously could take up hours and hours if you really want to know. And that's through training, through business school, right? And being a banker on Wall Street or a trader or whatever, and having the experience. I'm not trying to diss what you're saying. I'm saying it's going to take a long time to go through that. Listen, personally, if anybody wants to do that, we could hold another call. And I'm sure we'd both be very happy to go over what we look at in a 10Q or a filing on the markets that we think are important. Okay. And there's a huge difference between, again, the OTC stocks versus the other. But for me, OTC, the first thing I look up is, is the company up to date on its filings? If they are, how much debt do they have? When are the convertibles coming due? That's the first things I'm looking at before I look at a chart, before I look at anything else.
So filings is key. Okay, gotcha. Okay.
And the
thank
other
you.
thing I'll say, if anyone kind of wants to take a look for themselves, I mean, like, Alan said, it's one of those things to tell you the exact kind of, to go through it in detail. It's not as simple as, just telling you a few words. That's just not it. But if you want to go and have a look, go on OTC markets, right? Look up whatever ticker symbol you want to look at. And one of the first things you want
To
to see
disclosure.
Yeah.
Go into the disclosure part on OTCmarkets.com, go to disclosure, pull
Yeah.
up the filings, and just start reading them, and you'll start to understand a little bit better.
Right.
You know,
And the
like,
other
for example, HCMC is a good example, all right? I know everybody loved the stock because it was in Reddit and it was in all these places. So to me, the first thing I did is I looked it up and I just started laughing, because first thing I saw, it had about 150 billion shares outstanding. And fully diluted with $200 million worth of convertible debt, it had 300 billion shares outstanding. Now, for somebody like me, that's almost like a joke to me. I've never seen a share structure like that in my life. I can't buy something like that. It doesn't mean that people aren't going to make money on it. So in this crazy market, people did. I can't do that. So sometimes we could look at a company like that you're saying, and we may view it in a way and say, you know what, this is crazy. I'll give you another one. SFOR is a great example. A company that I know in detail, and I know other people on this do also. They did a Reg A offering at 5 cents at 4 cents a share. I think it's out there right now. But the stock is trading to 17 to 22 or 25 cents right now. And their stock literally being bought at 4 cents and sold at 17. I can't buy something like that knowing that there's sellers at 4 cents, right? And there's buyers at 17. Does that make sense?
And the other thing, I'll say for the filings is, when you when you pull it up, if assuming the company's current, that have a recent filing, once you pull it up, I mean, there's pages and pages. And drive yourself mad if you try to go through it, probably, if you've never looked at a filing. So if you do Control F on your keyboard, it's going to bring up a little search tab in which you can search by a keyword. You can do revenue, bring up, it's going to highlight all revenue. You can go through it. You could put in convertible notes. It's going to take you to that section. You go through the convertible notes. Is there any warrants or debt? All of different. You can use different keywords to kind of help narrow down that process rather than going through it page by page. That's what I do. I don't go through it page by page. I just search up the keywords, go in the right sections with the keywords. It's just less time consuming.
And we're happy to have a session, by the way, where we can show it on, put it up there and go, and we'll take a look at a filing on the OTC, go through where you can find certain things. I think that's really what you're asking. And then you could figure it out yourself.
that's a huge problem because when I look at it, I'm starting to learn the grasp of certain things on these stocks and on the OTC market. But that's why when I listen to you guys, you're talking about these moves, you're talking about these things, and I'm just like, how do you know? Like, how do you make those calculated decisions? So that's exactly what I'm wanting to work on.
So you know what? That's really good. I think that's a that's excellent, and that's a step towards really understanding what it is you're trying to either make a decision to buy, right? And I think it's a good idea that the next time we do that, we probably pick Galaxy is a good one, or whatever stock that everybody wants, and we just take out the filing and we go through it. Maybe that's what people want to be able to see, what we're looking at, and so on, and then how we're making decisions based on that. Honestly, some of these are so blatant. Like, for example, for me, HCMC, when I saw that outstanding shares structure and I saw how many shares there were fully diluted with the 200 million of convertible notes, that was an easy decision for me. It took me literally 30 seconds. I can pretty much guarantee you anybody who bought that stock had no clue about how many shares there were outstanding, because they never would have if they knew. So it's a great question, and let's do that the next time. I think it's a great idea. We should probably take a filing out, go through it, and you can see kind of the way people are thinking about it. I think generally the way Darsh and I would look at a stock, generally the way that somebody who's looking to buy and sell, who has all these things that these resources which you do have, you just know how to use them, would do. They're typical basic things, and it's not brain surgery. It honestly isn't. A couple of sessions and you'll get it.
Yeah, you got to learn how to walk before you run. Got it.
Well, it's just learn from. I learned from other people who showed me how to read the filings correctly, right? Whether it was from a teacher in business school or from a fellow analyst at a firm that said, "Hey, did you look at this? Did you look at this?" And you learn, and that's why we're here. And one of the reasons, again, why I think this room is so great, and it doesn't matter if you have, like I said, $2 million, which some people have in here, or a couple of $100, and you're just starting out. The whole 100 will turn into $1 million one day. So, a great question, and I think it's a good one for us to work on the next time, so that people can see that.
Yeah, no, we'll
For sure.
definitely
Thank
set
you.
something up where we just cover this, just this topic in particular. I think this will help a lot of people. And the other thing I'm going to say on this is, even if we were to do that, it's an easy thing, but it's a complex thing at the same time. And the reason why I say that is, for example, how the debt is listed on a Galaxy filing is not the same way debt is going to be listed on a GCAN filing. So there's no two filings have the debt listed the same way. So it's just one of those things. I mean, we can take you kind of through, where to look, what to look for. But the rest, it's not that it's we tell you this and you just all of a sudden are going to be the god at reading filings. It's not going to be the case. But you're going to have, more information than a lot of people do right now to be able to make those decisions. The rest, I think, is just you need to do it over and over. There's so many companies on OTC markets. Go through a random filing. Go just look at it. Try to get, a hang of things, right? Just the repetition, right? It's like going to the gym. You don't go to the gym and start, bench pressing 500 pounds the first day, right? You start small, so you understand.
Also, I would say this also. There's one person who is on Twitter who does a really good job with looking at charts on OTC stocks. I know Clay Trader's all over the place, and you can look at his as well. I know a lot of people have bad vibes about him. He's a good guy, all right? Just so you know. I know him. He's not a bad guy. He's just he got a bad rap. I don't know why, but look at his. But there's a guy named Raji Wahidi also who's done Galaxy. He's looked at Galaxy, and I would suggest everybody follow him on Twitter and look at the charts that he puts up there. He's followed a lot of other ones. In fact, he bought HCMC because of the chart. Okay? So I wouldn't buy it because I'm more of a fundamental guy. I look at it and say there's too much debt there for me. I can't do it. Looked at the charts only. I think you're asking that also. So there's a combination of both using the charts and the fundamental analysis to determine if you want to buy the stock.
Sorry, how do you spell his name? Raja Wahibi? How does it?
It's, you know what? I'll put it up. I'll copy and paste his Twitter info into the Discord room tonight or tomorrow morning, and you'll have it.
Thank you
It's
so
good
much.
to follow because I noticed, no problem. I noticed that he's been posting on these, And I know he did Gaxi, for example, and he's good to follow. I may disagree with his calls because, again, I look at it fundamentally, but he's got very valid points. And quite honestly, many times the charts work. In fact, a lot of times the charts work. CMC is a good example. I never could have bought it, but it worked for them.
Yeah, exactly. No, I think these are all great points. And CCO has just mentioned in the chat that they're recording this and it's coming to an end. And
Okay,
I actually
that's fine.
do have
We
to
could do
hop off.
another one. I'll find Raji's name right now and put it on the out there for everybody. I
Tigers
just want
haven't
to
put
thank
it there,
everybody.
So
I just wanted to thank everybody because I mean, this has been a blast the last several months. I hope everybody's had an amazing time because like a freaking party every day. I hope it continues. It's kind of like being in New Orleans during Mardi Gras and having Mardi Gras never end. You know, but there's guys like us that are there for caution too.
right. Yeah, no,
Thanks to everybody.
I'll say the same thing, for everyone that joined in here, thank you for taking the time to, come on here. And I think this is really great. We definitely will plan something in the future. And, this community we have, I think is great. One of the big things, a lot of us here, although, I may be a prick at times, we don't, none of us have a
Same here.
conflict of interest, so
Don't
I think
ta-
that's a great thing.
Don't take it. I mean, I'm a New Yorker who lives in Austin, Texas now. So if I say anything, believe me, it's not meant to be offensive in any way. I just don't want anybody to lose any money. I found his name. I'm going to put that in the room and ask any question you want at any time. We're always happy to answer questions and to help. Right?
Yep.
It's fun seeing everybody make money. It really is great. I mean, I personally love it when I see somebody make a great trade. It makes me feel great. So. All right, folks. Thanks for everything.
All right. Thank you so much
Thanks for your
joining,
time.
everyone.
Appreciate
And
it.
Thank you,
we'll
guys.
catch you all in the
Really
morning
appreciate it.
tomorrow.